Welcome to the Borderless Podcast, your guide to traveling, investing, and living beyond borders, where we talk about living the life that you want to live, where you want to live it. From beautiful San Miguel de Allende, smack in the middle of Mexico, with your hosts, Jonathan Lockwood and James Guzman.
Welcome to the Borderless Podcast, traveling, investing, and living beyond borders. This is that podcast for people who are interested in living a more international life. That might mean a lot of things, and there might be a number of reasons, but this is your podcast. My name's Jonathan Lockwood, and I'm here with James Guzman. Hey, James, how you doing?
I'm doing all right. I'm feeling very good today. How about yourself?
Great. Awesome. Excellent. You're still in Renounce, Chile, correct?
I am, and it's a great day. Very sunny outside, about 70 degrees. So it's how's the weather over there?
The weather was beautiful yesterday. It's one of the. It's typically, San Miguel in late January. It's kind of, you have some chilly days here and there, but I mean, it still usually gets up into the 70s, so nothing to complain about.
Well, I'll tell you one thing I've really missed since being over there is some of that Guino Mezcal.
Yeah.
But, how's that been going?
It's been going great. I'm good. In fact, I'm thinking about slurping loudly on it while you. While you beg for it. Sorry, but Anyway, things are going great here. I think toward the end of your visit there to Chile, we need to do like James Guzman's top 5 or top 10 favorite things about Chile, just to see what you. So be thinking about that maybe as we go forward.
Okay, all right, I'm going to think about that. And by the way, I should also mention, I put it on the website. I don't know if a lot of people have seen it yet, but I do have some contacts here, and so I'm going to start a similar thing that I've been doing in San Miguel. Maybe a lot of people don't know this in this podcast. I also offer what we do is we offer a service to people that want to come to San Miguel. Maybe they want to try a borderless lifestyle. Maybe they want to figure out how to, what it's like living outside the United States, how they can get set up, as far as a bank account and tax-wise and looking at real estate and this type of thing, whatever they're interested in, we can hook them up with professionals when they come down, meet them face to face. And I'm also in the process of having that set up here in Chile. So Santiago, Chile, that people can come down. There's a lot of interest down in this area, and maybe even check out the area here in Reñaca with Exosphere. Lots of entrepreneurs and maybe some good investments. If people are looking to start something new, maybe invest with someone that has a good new idea, that could be something exciting. So trying to streamline that is on the website if people are interested in checking that out. It's on the services tab.
Okay, nifty. So we are talking today to Michael Menzies of Pembroke Tax Advisors, and we're going to be talking about, is the United States the world's new favorite tax haven? This is inspired by an article that I noticed and James noticed and he sent to me. So we wanted to talk to Michael. Michael is a financial services provider based in the United States. Having traveled extensively throughout the Caribbean, Central and South America, Michael and his various firms provide financial strategy for individuals doing interesting things in the U.S. and abroad. Most of Michael's clients are small business owners who are interested in maximizing their opportunities in an ever-changing world. Welcome, Michael Menzies, to the Borderless Podcast.
Hey, James and Jonathan. Good to be on.
All right. So here's the deal. You were listening to this podcast some months ago. Is that correct? And you reached out to James, didn't you?
I did. A lot of the things that you guys are doing, they're the same types of things that we talk with our clients about every day. And I just sent a shout out to James, congratulating him and you on the great podcast.
Right. And you read my article that I wrote called "So You Want an Offshore Strategy," too, right?
Yes, I did. And I sent you an email to the effect of, it sucks that you don't get a lot of help, and I'd love to talk with you to see if we can assist you.
Right.
Something like that.
And so that's what's happening. I'm working with Michael now, and it's been great to find him, because what there are a lot of people who can sell you offshore strategies, or any sort of strategy. What they are, they're selling you structures, but in the end, you're going to need a tax person, a tax strategist, and I believe I found that in Michael, so I was really great to have found him. But anyway, this article I sent you the other day is entitled "The World's Favorite New Tax Haven is the United States." We'll put a link to that in the show notes. This is on Bloomberg. And why don't we just ask you, do you believe that there's any truth to this, Michael? While the U.S. is steadfastly going after all of these nations and banks in an attempt to kind of crack down on U.S. taxpayers who might have foreign bank accounts, is it true that they have become, do you think, the biggest and best tax haven in the world?
Well, so that's a very good question. It's also very broad, and just like many of us hear all the time, that the issue is complicated. So the answer is actually yes and no. And so let me give a little bit of background on kind of the yes part. So the U.S. has made reporting and actually, because of the penalties from enforcement are so substantial, such a hassle for the individuals, for the U.S. persons, as we tend to be called, and for the institutions who are setting up bank accounts for U.S. persons. It made those penalties so bad, and the reporting on those accounts so onerous, that many institutions abroad really don't want to house U.S. taxpayer accounts. And it's not that none of them do. It's just that it's a huge challenge for them, and the liabilities can be very substantial. One of the biggest ones was HSBC Bank and their Swiss branch about a year and a half ago. So yeah, they've been really aggressively going after accounts outside of the U.S. and the institutions that house those accounts outside of the U.S. However, the article that Bloomberg has, that is a specific category of tax haven that they're discussing, and that's really trust taxation.
Mm-hmm.
So that's kind of the place that this article is focusing on, and in that area, the U.S. is pretty good at protecting people's privacy. So it is a haven for people who are building trust accounts and want to have secrecy.
Right. And so, it's just one of those things where, I don't know, a more oblivious person might be surprised to hear that although the U.S. government has been demanding all foreign banks fully share all data with them, not only for U.S. citizens, but also for all their other account holders, even non-U.S. account holders. And yet they're not doing the same. They're not returning in kind, are they?
No, I mean, that's kind of the idea, is that in the U.S. there is a lot of bank secrecy that goes on, and we have a history of bank secrecy in the U.S. and that has created opportunities in places that really pride states specifically, U.S. states specifically, that pride themselves on banking secrecy, and specifically for people who are creating trusts or certain types of LLCs, there can be a lot of protections in the U.S. that our government, effectively are forcing other state institutions to report on, which you don't have to report on if you own one of these trusts.
Right. And so why don't you just make sure, I was looking into trusts this past year myself. Why don't you just break it down as simply as possible for people who are not absolutely certain what a trust is?
So a trust is some sort of entity, and there are a variety of entities that holds assets in the name generally of beneficiaries. Beneficiaries are just the people who receive the benefit of it. And the trusts are funded by companies or by individuals. And those trusts basically have a protective layer around them. And one of the common techniques that is used in the U.S. and abroad is to use a trust to shield the knowledge of who owns what assets. And the way that gets done most commonly, there are a lot of ways to do these things, by the way, but the way that it gets done most commonly is that there'll be a company, and that company is owned by the trust. And the trust is the listed name as the owner of the company, but the individuals who actually have funded or benefit from the trust are not listed as the people who own the company. So you can have XYZ Corporation in the Bahamas, and you can have the ABC Trust organization is the owner of it, and the underlying people who benefit from the ABC Trust are, James Guzman or Jonathan Lockwood or whatever, and no one would know that.
Yeah,
so,
that's always made me feel nervous when I get into it. And I guess it's basically, it is not legally in your name, but you
Correct.
have a private agreement with the trust.
Correct.
Okay. So,
Correct.
it's just highly, highly unlikely that they're going to take all of your assets and say, sorry.
Correct.
Okay.
Yeah. Yeah, and these things can be built in lots of different ways, and they're most oftentimes used to extend the breadth of some sort of tax protection.
Right.
So an example would be that someone has assets, they put it into a trust, and well, I'll give you, it's good to talk about current issues. So sometimes you'll hear in the presidential elections in the U.S. that are starting to kind of kick off about the fact that the person who becomes president has to put their assets into a blind trust, so they don't know what the investments in that trust are what's being done with those assets, and that's to discourage that elected official from making decisions that would benefit their accounts. So trusts are just sort of this shielding entity, and they can provide secrecy going either direction. That's how they work.
Okay, and what would you say is around about, normally when people think about trusts, it sounds like something that only very, very extremely, wealthy people with a lot of assets might be interested in. But what is the kind of threshold where people need to start thinking of, maybe a trust might be beneficial for them?
Yeah, so there are effectively three layers, I would say, are the kind of the way you can think of it. The first layer is just the legal protections, not just, but the legal protections. So people will put things into a trust to shield the assets from some sort of legal action. Oftentimes you see, marital trusts built that way, or family trusts built that way, where there's a risk that assets in the trust could be, they could be attacked by a creditor or something like that. And so they go into this trust so that the beneficiaries have some protection against the creditors. So, for example, let's say I had a creditor after me personally, but my assets were in a trust and my wife and I were beneficiaries of those assets, then the creditor might have trouble getting the money from me personally because I no longer own the assets. The assets are in the trust. So that's kind of the first layer. A second layer for people is the state layer. So many times people will build trusts to get some protection from income taxation to their beneficiaries, and typically states start really hitting you up with taxes when somebody passes away at around $1 million, and then at the federal level it's somewhere around $5.5 million. So many times people will consider trusts first for legal protections, maybe on assets of $300,000 or so, and then state protections at about $1 million and federal protections at about $5 million. Anything outside of that range, you have to really be cautious about weighing the costs, because the trust maintenance costs can outweigh the benefits.
All right. So the typical things that go into a trust, there are bank accounts, there are companies, there is real estate. Is there any limit to what you can put in a trust?
I mean, I'm not a trust attorney, so I'm sure there are limits someplace, but they're basically act as, a protective shell. And so if you have something that could be going into a protective shell that's a financial asset, that probably could go in a trust.
Gotcha. And so, as a result of all of the demands that the United States government has made on these other countries and the banks, lo and behold, these ages-old European trust companies are coming to the U.S. saying, hey, you can't beat them, join them. We're just going to come and set it up here because the U.S. hasn't, created all of these onerous requirements for them.
Yeah. So to me, that was one of the most interesting things about this article, and that people should be attentive to, is that most of the pressure that the U.S. is putting on these foreign accounts is on essentially secrecy behavior. It's not illegal to have an account offshore, and that's a big misunderstanding. Is you're allowed to have all the accounts you want offshore, but you need to maintain tax reporting compliance. And so the secrecy is the place where the U.S. has been focusing. And what makes that kind of ironic is that we have some good institutions, namely a couple of states, that protect secrecy really well. So if you're a non-U.S. yet again, if you're a non-U.S. person trying to set up some of these financial instruments, sometimes the U.S. is the best place to be the conduit because we tend to defend, our laws in one way and prosecute them outside of the U.S. in another way.
What are those states?
Well, so it depends on the goal, but the ones that are, it depends on what you're really looking to accomplish. But the states that are commonly kind of put in these categories as being tax preferential for trusts and other activities are Alaska, Nevada, Wyoming, South Dakota, Florida, Delaware, Texas. Those are kind of the main ones.
Okay, they protect privacy so well.
They protect privacy, but they also protect your taxation structure. So
Gotcha.
No income taxes or, thresholds that give you, more opportunity to sort of pay a moderate amount of tax and still be compliant. So they just make it easier on you.
Right.
Because remember, that some of these trust structures, they're only using trust because that's what works. These foreign entities that are building trust in the U.S., they'll use another structure if something else comes along that's better than a trust. So.
All right. One thing that we get a lot of interest that a lot of people ask us about is FACTA. And I've done a video, maybe more than one video, and some blog posts on FACTA, and it's always one of our most popular topics. I don't know if maybe we could talk a little bit about FACTA, how that that has now been rolled out for over 6 months now, almost a year. Anyways, how that's rolled out, how that's been affected, and what are some things that people need to be concerned or not concerned about as far as that goes?
Yeah, so we do, so depending on the client, we do overseas account reporting for clients. And I think the big thing to understand is that essentially now every single asset that is not in the U.S. that's held by a U.S. person in some way, shape, or form needs to be reported. And if it's not reported, the probability of becoming non-compliant is high, and that it's important to recognize that there are kind of three different layers. You have being compliant, you have being able to avoid taxation, which is defined as legally not paying taxes because you've built a structure that allows that to happen, and then there's not being legal at all and evading taxes, which is a great way to go to jail and pay a lot of fines. And so when it comes to account reporting, there are a number of different forms that are used to report. And whenever you're doing, whether you're using TurboTax or whether you're hiring a tax provider to do your tax reporting for you, you need to make sure that you're discussing with them or using the TurboTax help to get all of your reported forms in and on time, because the penalties can be severe. So if there's an asset overseas and you're a U.S. person, then assume that you have additional reporting compliance that's required.
Does that even include real estate?
Everything. Yep, everything.
Really? I didn't think real estate was something that needed to be reported.
Yeah, it needs to be reported if there's in a couple different circumstances. So it has to be reported if there's a gain off of it, or if there's profits from it, and then there's also sort of indirect ways that it's in your benefit to report. So if you have real estate taxes, you can that can oftentimes be claimed as a deduction. So if you have an asset that's overseas, you need to know that in some way, shape, or form, it's going to have to be reported. So.
You shared something with me when I first sent this article to you. I guess one of the things that might happen, okay, there are a number of people who are considering internationalizing, and among them are people who are thinking, maybe I just better separate myself entirely from the United States. Maybe that's the smart way to go. But after reading an article like this, they might have second thoughts, right? What are your views on that?
Yeah, so the way that I see it is that the world has changed, and we experience this with clients every day. That the perception that everything's the same and you can assume it's the old way is just wrong. You need to kind of throw out assumptions. And so the world's changed right now. If you're in need of if you have a lot of assets and you're in need of a trust that provides secrecy, then setting it up in Nevada might be a great idea. If you're person who's looking to move overseas and you think that, well, I'm just going to get out, then you need to understand that the current laws basically give you an exit tax. I mean, if you expatriate, there's an expatriation tax, and if you have anything more than $650,000 in assets, you end up getting taxed on those assets. And so it is really complicated, and that shouldn't make people intimidated, even though it tends to. It should make them feel that they need to become more knowledgeable and more flexible, and that the assumptions about how things are need to be questioned. And it is not uncommon for people to have large misconceptions about how these different rules work, largely because we're consuming it from a media perspective, not from a professional services perspective. So it may be a good idea to move overseas. It may not be a good idea to have all of your assets moved out of the U.S. and expatriate. That may also be a good idea. It just depends on your circumstances. It's challenging to say that there's a one size fits all anymore.
Okay. Yeah. I think that that's definitely true. And obviously with taxes, it depends on where you're getting your money, where you're residing, all these types of things. It has to be kind of looked at individually. What do you think about from a young person's perspective that might not be, maybe they have a lot of plans to do something in the future. They are a U.S. citizen, and they definitely have plans to make money in the future, and they hope to. Would you say that? Well, I mean, you don't necessarily have to give an opinion on this if you don't want, but I think that a lot of times when I talk to younger people like that, I think that especially if they have another passport and maybe they don't spend a lot of time in the U.S. now, that it would behoove them to renounce now rather than when they start making a lot of money. I think that it would become a problem for them, especially if they don't even go to the United States regularly.
Yeah. So as you guys both know, and I'll mention it, I can't give any specific advice on any specific case without really understanding whether it's suitable for anybody in particular. But in general, the types of things to weigh on that, James, would be, what's the person's net worth? So what are the assets that they have in the U.S. and what would be the taxes that they would have to pay on expatriating, if any? They may not have to pay any. If they have multiple passports and that passport, gives them the freedom to do the things that they want to do and travel where they want to travel, then, and the tax burden is low or non-existent, that may be worth the risk. Another thing is just sort of figuring out, how do they see what is the value of that expatriation versus the value of other types of strategies? So many times people will build their businesses overseas and still be able to maintain, a good tax and legal representation while keeping their U.S. passport. It just depends on the person. But all of that said, you're right. There are people with very few assets and a lot of opportunities are being burdened in a unique way at this point in history if you're a U.S. citizen, if you want to live overseas and work overseas.
Yeah. Okay. And also, I think that you have to think about not just what's in place now, but, where things are going. What's kind of the trend here? And as far as that goes, I don't see, right now that because of, we spoke about earlier, the Foreign Account Tax Compliance Act that has basically the United States has asked other financial institutions and governments of the world to give all the information on American persons directly to them. And this is kind of, I've written about other things as far as, the IRS is able to revoke your passport now and other types of things. You can kind of see this trend, especially towards number one, kind of the young people that have some sort of an opportunity, skill, or something like that, and also towards expats that those are both kind of easy targets and will be more in the future if the debt situation deteriorates and the economic situation deteriorates and they need to raise more taxes. Those are going to be easy targets coming up. So it's just, it's definitely something to keep in mind. And a lot of people, I think that that's a very drastic move. But right now, I don't know what are there any positive I don't know, is there anything positive that you would get from a tax standpoint if you don't live in the United States and you retain your U.S. citizenship? What benefits would you get from that?
Sure. So there are the benefits that are listed, and then we can question whether or not they'll be received. So obviously anybody who earns wages, they have to pay Social Security and Medicare tax. So those are benefit programs that are guaranteed to the citizenry, and people can collect the Social Security income when they're abroad, and depending on the circumstance, they can get some Medicare benefits when they're abroad. So people who are near retirement oftentimes would want to maintain that status so they can receive those benefits. There are questions of whether or not those systems are solvent, and people should be reviewing that information, based on their specific circumstance. A benefit that has been claimed for a long time, and I think continues to apply, is that the currency is strong, and so some people feel like there's some direct benefit by having the accounts held in the U.S. and U.S. dollars. And the currency has continued, especially in markets, to be strong as of late with the financial crises that have been happening in some of the emerging markets. And then people oftentimes are tied to family and things like how their trusts or how their insurance or whatever are structured. So those are the types of things that people typically talk about as the primary benefits. I also think that Americans tend not to carry that many. Most Americans don't have a passport, or if they do, they don't travel very far away. And so fear, I think, is another big reason that people will just keep it. So,
I realize the tough spot you and people like you are in, Michael. You listen to the Borderless podcast, and we've had some private conversations, and yet you are on a podcast, and later here you're going to have to read a disclaimer because it cannot be perceived with the licenses that you hold that you are giving specific advice to people, right?
Correct.
Right.
Correct.
And so you did say something, though, and I think I want to maybe get right to a point that some people can kind of grab onto here. And I don't like to get long here. I like to make it more about you, but I want to read something because you said something about challenging your own assumptions. Okay. Now, I hate to do this, but there's this very dear old friend of mine from Michigan who is a wonderful gal. She's not a very political gal at all. I am sure she does not listen to this podcast, but she posted this the other day, and these might be some of her assumptions. She says, I love weekends and lunch breaks, 8-hour work days so I can spend time with my family. Family Leave Act is awesome. So are child labor laws. I don't mind paying into Social Security, hoping it can help me when I'm older. I love my health care. I love it when men and women get equal pay for equal work. I think Veterans Employment and Training Services is brilliant. I love not working on the holidays and the fact that military leave is a thing. I like knowing my workplace is safe. Thank you, OSHA. And if I'm unable to work due to lack of work or a major illness, I'm glad we have unemployment insurance and disability. So today, I salute unions because thanks to them, you get things. So those are, I don't mean to disrespect anybody who holds on to some of those values, but those might, within what she wrote there, might be some of the assumptions that many of the people who listen to this podcast have already challenged. And yet, you can find yourself in a place in bouncing back from those assumptions that I just read that is almost just as clueless, right?
Yeah. I mean, so part of what I think you're getting at is that there are pieces of the structure, the social safety net structure that are so dear to people's hearts that they're either unwilling or unable to ask the questions if those are more superior to the alternatives. And we live in a highly globalized world, and everything from assets to people are moving all over the place very rapidly. And that context provides both opportunity and risk. And so when people get really attached to a certain structure that's in place, like, say, a social safety net, it might be easy to miss that there could be jeopardy that structure is, under threat.
Right.
And they just want to be in denial of it. And so, so I'll give you a concrete example about something that I can easily talk about for just sort of general discussion. So For example, we advise in one of the businesses that I have, we advise clients on when to take their Social Security benefits. And that question comes up a lot. And that's because many people rely on Social Security benefits, meaning just the income benefit you get when you reach one of the age brackets and you take your Social Security benefits, which are payments that people receive. So people will ask, when should I take my benefits? Depending on your age, that's typically anywhere between 62 and 70. And if you take it at a later age, you could receive a larger benefit. Now, we have clients that come in and say, because the system is bankrupt, I'm going to take mine right away. And the fact is that the system is underfunded, and it's going to be substantially underfunded to the point of not being able to make all of its payments right around 2033 or 2034. Mm-hmm. So from a practical perspective, a person who is, and this is not advice, this is just something that I'm explaining, a person who is in an age bracket that they're going to die before 2033 or 2034, it's just a better risk to take it at the right age. But a person who's going to be age 34 when they're going to start their benefits, it's a better risk to consider that maybe it's not all going to be there for them.
Gotcha. All right.
Is that a way of giving some?
Yes, boy, you have got to measure every word, don't you? Do you have lawyers standing around you? No, no, but I appreciate it. Thank you for that recommendation. And you know what I'm going to do, if you don't mind, we're going to take a break here in just a second. But when we come back, why don't I talk about some decisions that I made by means of some help, advice that you provided? Is that okay?
That's great.
Okay, perfect. All right, right now we need to take a moment and give some attention to our sponsor. Today's Borderless podcast being brought to you by the Condescending Group, your hippy-dippy, touchy-feely leaders in the subtle art of having really high self-esteem for the stupidest reasons. Last week, we were able to release the big announcement about the Condescending Group's forthcoming Global Condescension 2016, where all the world's least productive people are invited to unite in Portland, Oregon, right there near Michael Menzies, with enormous fake smiles on their faces. But our friends are still looking for a venue. That's right, no one seems to want to host this event in their building. They were close to getting space in the living room of a group home for the mentally ill, but the schizophrenics thought the Condescending Group folks were, their words, pretty out of touch with reality. And that's tough coming from schizophrenics. So they've asked us to put the word out. If you know anyone will let them and their followers into any kind of space at all, the Condescending Group will promise to perform mandatory flea dips on every single attendee. I'm sure that'll warm folks up. If you have any suggestions at all for them, just go to thecondescendinggroup.com now and click on the aluminum can of flea dip chemical. The Condescending Group, we care more than you. Okay, we're back to the Borderless podcast, and we're talking to Michael Menzies of Pembroke Tax Advisors. We've been talking about a lot of things, and one of the things that I wanted to do, people, if you listen to the podcast, if you read the article I wrote some months ago about So You Want an Offshore Strategy, you know that was what my plan was for 2016. And in looking, there was just no shortage of people that I could get advice from, and I think a lot of it was really good advice. We've had some of them on the podcast who are great people that I want to stay in touch with. But the reality is, in the end, somebody had to do my taxes. And I had to find somebody who was on board with the strategy. And then in finding them, they have recommendations about different strategies. And so I guess my advice to you, if this is a thing that you're considering, always find the tax person. That is going to be the person that directs your final decisions in this regard. And so, I brought Michael on. Michael and I were having some conversations last year, and it was his recommendation that in my specific circumstances, no matter how much I thought it was the right idea, that in specifically my income category, I should consider not doing an offshore plan. That, among other things, it does, you kind of sort of raise your hand and wave a flag and say, hey, I'm doing something out of the ordinary here, that could attract the attention of the United States government. And with some perfectly legal and intelligent ways of, structuring myself and my business, that there would be a way to pay very little tax and not raise your hand in that way to become that object of potential scrutiny to the U.S. government. Did I say that right, Michael?
Yeah, I think that many times these topics are very emotional. You probably one of the reasons that you guys have so many listeners is that there's a lot of compelling information in discussing offshore strategies in so many different directions. But what we find is that it takes different income thresholds and different business structures to really make it cost effective to go to to the next level of extreme. And so a lot of times the current business structures that are available to people in the US are just, I don't want to say poorly utilized, but they're substantially underutilized. And so for your specific situation, Jonathan, it made a lot more sense to get the structure in place first, and then to look, later on to see if some other offshore components make sense.
Right. Yeah. Very good. And so it very well could be that sometime in the future that my income could be in a place where it would make sense for me to have an offshore strategy. But at the present time, I'm not doing that. And I'm really grateful to have found someone who could just break this down for me. And are you comfortable talking about, for people, one of the things that I was trying to find out, there are people out there saying, come on, do it. And then you got other people saying, oh, be careful. And what I was looking for was somebody to attempt to quantify for me just how much of a risk might it be to do something like starting an offshore company, moving out of the U.S. What was your advice to me on that? Do you recall what you said to me?
Probably it was along the lines of the volume of revenue that you had coming in, and typically somewhere around $250,000 in revenue is a common target that people discuss. And then also it was along the lines of your enthusiasm and willingness to become a fantastic bookkeeper and accountant.
Right.
That the need to have really, really good books and records has become critical in just about any type of industry. And running a business is basically some sort of financial instrument these days. And you have to have phenomenal bookkeeping and books and records because the not doing that is just really setting yourself up to have some problems.
Right. It's sort of like every one of your monthly files, every single thing in it must be placed within it with the idea that an audit is going to happen tomorrow, right?
Yeah. So yeah, you have to. So you basically have to start wearing. You have to become a compliance officer in your own business, and that's true in various industries in the U.S. and elsewhere. But as soon as you decide to move the business activity overseas, and this is, at some point, this will probably be true for even internet-based businesses doing some sort of activity in the U.S. Your ability to keep records and show that you're tax compliant it's just absolutely crucial. And it is expensive and time-consuming to do that.
All right. And so I got my answers and I made my decision for this year, and I'm satisfied that I'm doing the right thing. And I appreciate having found Michael for that. Now, James, I know one of the things that you were interested in talking to Michael about are some of the changes for 2016. And did you want to ask Michael about that? Were there any big ones?
Yeah, well, sure. We can talk about that for a minute because, we actually are going to be doing a webinar coming up this Saturday. And so this is coming out on Monday. The same week on Saturday, we're going to be doing a free webinar with all of the different, some of the new, I guess, what would you call them, Michael? I guess the new policies or something that have been put out. What are these labeled as?
Yeah, just the new tax provisions, the 2016 tax provisions for the 2015 tax year.
Okay, and to be clear, this Saturday we're talking about February 6th.
Correct. Yeah, yeah. So we'll be talking about that and how they affect expats or people that are maybe thinking of taking some of their money outside of the U.S. or whatever that they're thinking about doing. We're going to be talking about tax laws and how that affects people. Right now people should be starting to think about how they're going to file this year. So I think this is going to be a really timely webinar. And I'll send out something to have people sign up for that. And anyways, so I don't know, Michael, I know that you guys are still, you got your whole office there looking over all the new provisions, making sure you have everything right and how they might, you can apply that to some of the clients that you have to help them. Is there anything in specifically that you've seen that's different, or is there anything that maybe you think that people would find interesting, maybe a little tidbit of some of the things that we'll be talking about on Saturday.
Sure. Yeah. So there are, James. So a couple of them. The first one is that the Affordable Care Act, which is sometimes called Obamacare, the penalties are going up for people who do not have health care and healthcare coverage, health insurance rather. And they're now for 2016, if you don't have health insurance, the penalty can be as much as 2.5% of your adjusted gross income, which can be substantial. Up to the limit is the cost of an average bronze plan in your area. If you are, however, living abroad more than 330 days over a 12-month period, you actually get a health insurance exemption. So we do get that question quite a lot from people who are moving abroad and they're paying for health insurance and they're concerned that they won't be able to afford it, but they know they're going to be gone for a year. And so we bring that into the conversation about trying to stay out of the country for 330 days, also remembering that that includes your travel days in the U.S. So you have to be out pretty long time. Another one is that the foreign earned income exclusion has gone up just a little bit. A lot of these are adjusted for inflation. So it's $101,200. And that's a question many times clients come to us with because there's a lot of misunderstanding on how to apply the foreign earned income exclusion and how that can tie into business activity to get a better structure for your tax management. I hear lots of blanket statements about if you make $100,000, you don't have to even file a return, that kind of stuff. And we're like, okay, that would not be our recommendation, but if that's what you want to do, don't call us when you get in trouble. And then the last one that I'll mention was actually not something that came out this week, but rather that people should be aware of if they are thinking about going overseas, is that back in 2012, there was a pretty vigorous discussion about attaching a what's called the seriously delinquent tax rule, which would mean that, which basically is listed as if you have more than $50,000 in back taxes to the IRS and you're not on a payment plan, then your passport privileges can be revoked or denied. And so if you are considering an overseas move and you are in that situation, it's pretty important that you're addressing that tax circumstance, because you don't want to be traveling and lose access to your U.S. passport. So those are the big ones for right now, I would say. Okay, great. Yeah. So, definitely people, if you have time this Saturday, please show up to this. I think that possibly there'll be a replay, but maybe not. But if there is replay, it'll only be for a limited time. So I would really recommend that people get on there. You can actually ask questions directly to us during the webinar. So, it's time to start thinking about these things. I know a lot of people try to push it off till last minute, but, if we can kind of proactively look at the way things are changing and you can set yourself up better that way. So.
Yeah, we appreciate you coming on, Michael, so much, and you've given us a lot to think about here. And so look forward to that event. We have whetted your appetite for this Saturday. And James has a question he likes to ask. How will you phrase it to Michael this week?
Well, Michael, let's think. If you were, say, a young person who was trying to get started in the world, and maybe they, you wanted to, it doesn't matter whether you want to move overseas or not, but I mean, you have set up your own business and you've been successful in that way. If somebody wants to do something similar to what you've done as far as setting up your business, what is the best piece of advice that you would give them?
I think that if you have found something that you're passionate in and your business is something that you really believe in and you really want to do, you're well on your way. But what we see with clients who've gotten to that point is that they need to allow themselves to be open-minded to how things have changed and how they are in the world now and how complex things are. With complexity comes opportunity. And if you can, mesh that, the passion and the recognition that there's complexity and an opportunity in complexity, then I think what most people will find is that the next step is just to go do it and not to be fearful. The final thing I would say on that line is, don't don't be afraid once the thing is going and it's working to find some help. You should be focused on your passion, not on the drudgery of the types of stuff that we do every day. So.
And Michael, why don't you just you and your wife have a farm and a distillery there in Oregon, right?
Yeah, we've got a small organic farm that we built a house on in Oregon, and we've been doing small scale organic farming for almost 20 years on and off. We're also actually opening a branch office for the firm in Nevada, so I'm splitting my time in those two locations. And then we have been involved in small scale craft beer and distillate production for years, and formed a club around that in our local town. And yeah, it's a big passion of mine is the production of alcohol.
All right, that's great. And so we've had some nice conversations about the mezcal that I've been selling here locally, and you say you make a distillate out of the Jerusalem artichoke, is it?
Yeah, so that's kind of been one of our pride and joy. So the Jerusalem artichoke or sunchoke is it's constructed of a sugar very similar to the sugars that are in agave and mezcal, and that's the inulose sugar. And when that sugar is roasted and enzymes are brought out in that sugar, you can distill a really nice smooth spirit. And the Jerusalem artichoke version in Europe is called Topinambur, which is a French and German distilled spirit, and it's similar to a good mezcal or a good tequila, but it has a slightly different flavor to it.
What do you know? I'm going to have to try that sometime.
Yeah.
And of course, you are invited. I think you're going to try to make it down here to San Miguel sometime, not before April 15th, but sometime thereafter. And we would love to have you.
April 15th. Yep.
Well, yeah. Okay. I know. Busy. Well, thank you very much, Michael Menzies. We appreciate your advice, and we appreciate your being our guest this week on the Borderless podcast.
My pleasure. Thanks, Jonathan. Thanks, James. Hello, everybody. This is Michael Menzies. A brief disclaimer for our firm. All information provided here by Michael Menzies, Pembroke Tax Advisors, and/or companies Michael Menzies owns, in part or in full, should not be considered investment, legal, or tax advice. Nor are Michael Menzies, Pembroke Tax Advisors, and/or companies Michael Menzies owns, in part or in full, providing representation of a foreign government or agents of a foreign government. Any communication herein should not be taken as such. Before undertaking any action, be sure to consult a qualified advisor.
Okay, so if you enjoyed our discussion with Michael Menzies of Pembroke Tax Advisors, remember we do have that webinar coming up with him that you can get access to this very Saturday, February 6th. Please join us. Also, if you enjoy the podcast, please go over to iTunes and rate and review us. We will read it on the podcast. We enjoy doing that. Thank you very much for your kind reviews. And the Borderless Society also is available to you. All sorts of stuff. Get in on the conversation. Get in on the fun. Get in on those twice monthly sort of mastermind calls that we do. That's great. We sync up with people all over the world. We find out what they're doing, find out what's going on with them, and you can be part of that as well. Another Borderless podcast coming up soon.
Thanks for joining us for the Borderless podcast, traveling, investing, and living beyond borders.